Not know, I am Peter Benjamin, and I couldn't be more excited to welcome you and moderate today's webinar. Before we get to our presentation, just a few housekeeping items. This webinar is being recorded and we post it to our website in the coming days. I will monitor the Q&A. Feel free to ask questions and I'll do my best to weave them into the conversation. Finally, the ACUMA team is already busy planning next year's agendas. We are planning to hold 5 events next year. If you have a topic that you'd like to see discussed at one of these events, feel free to email me directly or send a message to teamacuma@acuma.org. And before we jump in, just a quick disclaimer. The views and opinions expressed during this webinar do not necessarily reflect the views. Sorry about that. My computer apparently decided to kick me out. So, as I was saying, a quick disclaimer. The views and opinions expressed during this webinar do not necessarily reflect the views or positions of ACUMA, its board of directors, its management staff, or its members. The webinar and its materials are presented as ideas and possible strategies regarding its specific topic. They do not represent any endorsements of the presenters, their firms, or the concepts they present. Today's webinar is being brought to you by Byte Software. Joining us today is Bobby Palmer, VP of Marketing. Bobby, my friend, how are you doing? Welcome to the webinar. It's good seeing you.
Good seeing you as well. Great to be here. Thanks for having me.
Of course, Bobby, of course. So Bobby, Byte, actually, I just learned this the other day. So Byte has been in the mortgage industry for 40 years.
Yeah.
Yeah, a lot has changed in that time.
Yes, it has.
So
Ups and
what's
downs.
new with Byte nowadays?
What's new? Yeah, we're celebrating 40 years this year. So Byte's been around. We've seen it all, done it all through the ups and downs. So really, really exciting time at Byte right now. The first and foremost, the biggest thing is our new Byte Web, our browser version of Byte. So has all the functionality that our customers love with Byte Pro that we've had for years. But it's in a fully browser-based environment with a whole new UI, same functionality. So that we've been working on that a long time. It came out this year, and we're just thrilled. So that's probably the biggest change. So if you've used Byte in the past or you looked at it even 5, 6, 7 years ago or more, completely different system now. Would love to have you come take a look at it again. So that's one of the biggest things. Also Byte Price. So we have a built-in pricing engine that we're coming out with. It is in beta right now. It should be available to demo about Q1 of next year. So that's very exciting for us as well too. So and probably the next last thing I'll mention in our release that's coming out this week or next week, we added everyone's talking about AI these days, right? And so we've added a new AI-based workflow automation builder. And the reason I bring that up on here is because, especially with credit unions, a lot of times the admins for the LOS, they're not developers, right? They're not writing code. And so to have an AI-based, basically automation builder that really anyone can use is a huge thing for us. So we're really excited about that.
I love this next question because I think it plays nicely into really the heart of our conversation today. I think you and I can agree that credit unions often need something that's very different from independent mortgage bankers or even regional or national banks.
Yeah.
As we think about this, does Byte have any features that address these specific needs that many of our members have when it comes to technology?
Yeah, absolutely. And credit to you guys and also all the folks that attend your conferences. I've learned a ton personally and Byte as well, attending your conferences and webinars about what credit unions needs and what their specific needs are. So the biggest thing I learned is I think I mentioned earlier, you have a shared IT staff. They don't just manage it for mortgage, it's for the whole credit union. So having a system like Byte that's super easy to administrate is so important and so helpful to credit unions who oftentimes don't have that IT or that developer staff on hand or that they can just go to do stuff. So many of our credit union clients, the Byte admin, the LOS admin, is actually like the head of mortgage lending for the credit union. So they're definitely not a developer. And the cool thing is they can do all that in Byte. They can create their own custom screens, their own custom fields, custom pipeline views for workflows, their own business rules, validation rules, and then the automation I mentioned earlier. So we really empower the credit union staff to be able to do all that customization. I'll give you a quick example. We did a webinar with ACUMA earlier this year, and it came up where they actually had their branch staff starting loan applications for people. They only had like one or two loan officers, so they were able to. The admin, who was the head of mortgage lending, was able to create a custom role for that branch staff where they can only have access to certain screens or only have access to certain fields. So we didn't get any compliance issues there because they weren't a licensed loan officer, but did allow them to start the loan app. Or you can have loan officers do their own disclosures or lock loans. All that could be configured by the admin without having to be a developer. So that's huge for credit unions. The other big thing is service, right? That's why people go to credit unions, is because they expect a higher level of customer service. Same thing with Byte. So if you need help, you call in. We have 100% US-based live support. You can actually talk to someone on the phone. You don't have to just submit a ticket and hope it gets answered. And our average tenure is over 10 years. So you're going to get somebody that really knows Byte inside and out. And honestly, that's a big reason why 100% of credit unions that responded to a survey last year said they would recommend Byte to their peers and colleagues, in a large part because of that support. Last thing specific for credit unions, we just announced an integration with Vertex, which really allows seamless data transfer into your core banking platforms or servicers if you have that. So that's a big thing for credit unions as well. It comes up a lot when we talk to them at conferences.
No, I love that. This next question plays in, pretty nicely. Not only does it play in nicely with today's webinar, it's also, plays in nicely with another white paper, we're in the middle of writing about,
Mhm.
the need for a credit union to invest in technology.
Yeah,
And I think, you and I have had this conversation, oftentimes when you look at a credit union, and this is really the heart of today's webinar. Oftentimes credit unions have resources that are often pretty thin, right?
yeah,
Their resources internally are, strategically allocated to the point where, credit unions are often left on their own, right? Especially when it comes to even changing an LOS platform, right?
yeah.
I remember doing it, I had to do it on my own internally, and that was impossible. I'm
Mhm.
not an IT guy.
Yeah.
So, to that point, again, how can Byte or how does Byte help credit unions when they want to make that switch to a different platform?
Yeah, it can be tough. I mean, nobody likes change, right? And so there's a couple ways that we handle that. First of all, our implementation team is awesome. I can't say enough about our implementation team. They're our professional services crew. They're who I go to when I have questions or when I'm building videos for Byte. And you get one-on-one, hand holding basically with one of them. They don't leave your side until you're comfortable. And really, the goal is to teach you guys to be self-sufficient. Referencing what I said earlier about ease of administration, we teach you how to run the system. We don't just set it up for you and then say good luck, right? You guys can be so self-sufficient, which is incredibly important for credit unions specifically. So that's number one. I would say if you're interested in making a switch, don't judge us based on your last implementation. If that one went rough, you're going to have a great time. And I'll have a link to a discussion we had on that in our earlier ACUMA webinar. I'll share with you in a second. Also, we want to make it easier. It's been a tough, 3, 4 years. And so ACUMA members actually specifically have a member benefit where they get 3 months free up front to kind of help eliminate that time where you have to pay for two systems because that's hard, right? Financially, especially for credit unions where maybe margins are thinner. Um, and then lastly, because it is our 40th anniversary this year, we did a 40th anniversary pricing special where we geared it especially towards that same issue you just brought up, where you can spread implementation costs out over 3 years. Again, just trying to make it as easy as possible on people that have had a rough, few years. That want to make a change is beneficial. They get the efficiencies and things, but the upfront costs are hard. So we allow them to split that over 3 years, and we do 1 year contracts. So we have to earn your business, you know. Yeah, so after year one, year two, you know, if you don't like it, we eat that cost. That's how confident we are. So those are a couple ways we help them.
Okay, love it.
Yeah,
Last question before I let you go.
absolutely.
Where can our members go to learn more about Byte?
Yeah, easy. Bytesoftware.com/ACUMA. We created a page just for you guys, for your members. So bytesoftware.com/ACUMA. There's a copy of that implementation webinar we did with you guys earlier this year there. You can hear directly from credit union members what it was like to go through an implementation. And you can always hit me up on LinkedIn if you have any questions. That's it. Yeah, thanks for having me.
Of course, thank you, Bobby, again. Truly appreciate your time today and for sponsoring today's webinar.
Thanks, guys. See you later.
Now, before I bring in our panel, I first want to provide with everyone with a quick background behind today's session. In late October, we published a white paper entitled "Making the Case for Mortgage Lending Within Credit Unions." Our panel are three of the five experts that we used in the development of this paper. Our experts are not only passionate about the mortgage industry, but they truly want to see credit unions evolve. And it's my honor to introduce everyone to that panel now. So, panelists, if you could come on stage and join me, let's have a nice little conversation. First up, joining me, we have Ali Nassirian, CMB, Senior Vice President of Lending Solutions and Secondary Sales with Lafayette Federal Credit Union. Next, we have Rob Chrisman with Chrisman LLC. And finally, we have Laird Nasuli, CEO with iEmergent. Everyone, welcome. Excited to have you all here. Now, today is all about providing our audience, this group with strategies they can use to help grow or even possibly implement mortgage lending within their credit unions. I said it earlier, I'm looking forward to gaining your perspective on what we need to do as an industry. Although I have a handful of structured questions, if we could do our best to have this resemble more of a fireside chat, where we keep the dialogue flowing. And if you feel like you can contribute to an individual piece of our conversation, I urge you to please do so. I think that's the only way that our audience is going to walk away with you with the most value and really start, gaining ideas as to what they need to do to grow mortgage. I think that's ultimately what it's about. So, Rob, I'm going to turn to you first. As I mentioned, the paper's premise was about investing in mortgages and really a focus on that it isn't just strategic, it's mission driven and builds durable member relationships. From your vantage point, what's the most compelling mission case for scaling mortgage and credit unions right now?
Well, first of all, can you hear me okay, Peter?
Yes, I sure can.
Thank you for having me. Uh, I would say that when you talk to somebody at a credit union and you say, especially on the mortgage side, how's it going? Oh, inevitably volume comes up, or, oh, I just helped this borrower, you know, I just helped a member become a borrower, whatever it might be. And I, for some reason, think back to when I was a little kid and my mom. And that was a long time ago, Peter. Longer than I care to admit. But I'd go to the bank with my mom, and she would always go to the same teller. I know this is a credit union session, but I'm relating it to a bank because I view the banking then more like credit unions now. So I'd go to the bank with my mom, and it was whatever the bank was. It became Barclays, which in turn got bought by Wells Fargo. But we'd go in there and we'd go to the same teller every time, and it was part of the community. It was a relatively small town, and they knew my mom and they knew me. I was only 7, 8, 9 years old, and they were woven into the fabric of the financial situation of that town. Now, fast forward to today, and a lot of people don't even go into a credit union or a bank. I still do, based on how I felt going into that bank back then. And credit unions now, I think, are in an enviable position to keep that feeling going. And when you talk about a mission statement, what is the mission of a credit union? What is the purpose of a credit union? I still think it is to serve the community, to be part of that financial cloth that holds a community together. Fast forward to today. I was talking to somebody recently, and they were asking me some questions about money. Somehow people ask me about money. Fine, I'm fine with that. And they said they had saved up $30,000. And I said, well, what are you going to do with it? And they said, I don't know. And I said, well, have you thought about buying a home? You know, you can buy a home and you can borrow and buy a home. So we talked a little bit about that. And he asked, I've got it at a bank. Would you recommend me putting that money somewhere else? And the first thing I said was, had thought about putting it into a credit union. There are probably credit unions that you can belong to that will provide you some great services. They've got great returns on deposits. They've got account services. They've got this, that, and the other thing. And he said, do they have mortgages? I said, absolutely, they have mortgages. I said, usually the mortgages offered by a credit union are going to be better than those offered by a broker or a bank or an independent mortgage bank. And then I had to explain what those were to this fellow. But so I put him down the path of the credit union. I think that as a credit union right now, and we've all seen their business expand dramatically in past years, it's nice to see that there's a sense of community with credit unions, and they are there in effect to serve the community. And so when you ask me about a mission and how does it help satisfy that mission? Home ownership is the basic part of the financial health of a lot of individuals and of the community. And so what better way to be involved in that than to offer a mortgage product that helps your member?
Well, I love that, and and thank you so much for sharing that personal story, and it really kind of sets me up nicely for a question I have for Ali. One of the we'll call it mission adjacent things about providing a mortgage to a member is that it's proven to deepen our overall relationship with them, right? They're more likely to get checking accounts, you know, auto, home equity. They're gonna, retain their mortgage longer, right? And so Ali, really looking at you, what are the two, I don't want to call it fixes, but I mean, I guess that's probably the right term. What are the two fixes you'd make to ensure that the member experience reliably converts to that full relationship, long-term members? I mean, you and I have talked about it, Ali, and several times. We even presented on it at an event in California, member for life, right? We talked about financial health, financial wealth for their lifetime. What can we do to kind of get to that point where we are providing that service to our members?
Yeah, I think, number one, it's important to kind of step back. So just what Rob was just mentioning, they're coming to the credit union because the community, the wanting to belong, they're very proud to be a member. Sometimes they may not, like he said, they weren't familiar that the credit union had the mortgage product. So to step back before you go into the penetrating and deepening the relationships, make sure that mortgage experience, it was a good experience, right? Because nothing worse than they go through it, they had to use you because you only had the product they needed, and it was a terrible experience, no communication, took forever, stressful, and then you're going to go into, deepening that relationship. That's going to be uphill battle, right? And Peter, you mentioned at the conferences this year, ACUMA conference and ACU, we talked about mortgage strategies, and techs that cost originate. Hopefully credit unions have cleaned that up and fixed that. Still time to do so if not. But let's say, again, you had a great experience, great mortgage, you closed. I would say make sure that, once that process is closed, don't have a silent period. have a frictionless, proactive onboarding journey, whether it's memorization. There should be some offers, hopefully, for other products right there, a credit card, some of your other consumer products that you already have, a lot of information on them, income and credit. Those decisions can be automated, made right there. A couple of other things that you want to touch on is, you know, having everyone buying into this process. This is a lifelong relationship, right? So having that homeowner cycle that goes over, check-ins, periodic check-ins from the loan officer, maybe as a relationship manager, that checks in, make sure they have the right products, right resources that they need, making sure you're providing some homeowner advocacy to them. Uh, HELOC should pop up during that process. And having the not just the loan officer but other staff members, maybe align their incentive plans. So mortgage teams are cross-selling or vice versa to your consumer partners down the hall, adding value to each other. There's visibility of, hey, look, we got this member. This is the type of credit they have and assets they're bringing to the table. And then I think during this process, take advantage, if you got that tech stack and an amazing experience, start creating and prompting enrollment in all your digital statements, right? All your e-signing and all that. Take advantage to get them. They're engaged right there. They're involved. They're communicating back and forth with you. So I think it's a good opportunity to further that interaction with the credit union. But don't let up. Don't let that silent period. Don't let it get too long to where you're like, you know what? It's been a year or two. They probably forgot about us. You know, don't leave that baton hanging right there because there's other competitors out there that have their data and are constantly sending communication to them, and they can get them distracted. So I think those are the big ones.
Okay. Now, Laird, I'm gonna come to you next. And because I think this, everything Ali has said is important. And I find this interesting. The number of credit unions that originate mortgages continues to decline, but applications at credit unions have grown from approximately 10% to 15%, despite, this market that we're in, right? So I mean, you're the data person. You guys have a whole bunch of data, and you provided amazing data for our white paper. From your perspective, what does this tell, credit union boards about a credit union's ability to lend, in today's market, mortgage lend in today's market, especially when they're on that fence of trying to invest or deciding to invest in mortgage.
Thanks, Peter. I wanted to say that before I get started. And can everyone hear me?
Yes.
Okay, so I like this question because I think that, like a lot of times with data, if you look at it more closely, it tells a story that, this resilience, it's not really just about surviving in the downturn. It's about, becoming more relevant and being there for potential customers and current customers when they need it the most. And so, that can, we can see that through a number of different trends. Like we all know that the total volume of mortgage dropped considerably. But as, if you read the white paper, and I'll talk about more now, credit unions did gain an overall, gain share in the number of applications. But a lot of that share was with smaller dollar loans. So home improvement, refi, HELOCs. And that kind of makes sense, especially as Rob and Ali talked about that, credit unions would gain share in this kind of lending because those products are well aligned to and move with their members' needs. So, but it also means that the fact that that was the driver, that credit unions maybe still aren't engaging or investing enough in purchase mortgages. Okay, so that's one data trend. The other one is that, as you said, that we looked at data from the NMLS and, from NCUA, and it shows that the number of credit unions is decreasing, but the membership is growing. So that indicates, again, potentially, that by offering, establishing, relationships with, these home lending products, they're discovering new members. But going back to that untapped opportunity, as we'll talk about later, there's so much purchase mortgage opportunity, and it's specific purchase mortgage opportunity that I think is available, especially because we're talking so much about affordability. Like that's really the main concern for most people, most lenders, right now. And so here's where the credit unions can kind of take advantage of, the philosophy of focusing on member needs. So, they have they have the ability for manual underwriting. They can offer better pricing, more transparency, better education. All of those different things can result in new opportunities that really come from being there to have to help the households that are most impacted by affordability. So that's first-time home buyers, first-generation home buyers, low to moderate income, and households of color. So being there to help households when they need it the most, especially if other lenders, whether it's IMBs and banks, aren't there to help them, that equals a long-term partnership, between a credit union and a member. So when you add to that the fact that, mortgages help diversify credit unions, their loan portfolio and offer liquidity and revenue, it feels imperative that credit unions keep investing, for their members in markets. And in some ways, it's not a question of should they invest in mortgage, but it's how best to invest in mortgage.
No, and I love that. And the term that you use is obviously investing in mortgage, and that's really the purpose behind this. So and so I kind of sort of have to ask this, right? With investment, there's always an impact on the balance sheet. And Ali, I'll throw this to you, and Rob, feel free to chime in. But because of that investment, because we're this white paper, and really our conversation today is really trying to get credit unions to invest in mortgage, right? So Ali, from that balance sheet perspective, where or even how does a strong mortgage line of business help reduce overall risk? And what governance metrics would you monitor?
Well, the mortgage, it's gonna, number one, it's gonna diversify your credit concentration risk. We've seen, there are credit unions out there that are heavy, let's say, in an auto or consumer product. Mortgages currently and historically have lower default rates than, other loans, autos. Obviously, it's a secured loan, so you have a higher recovery even in downturns. So you can move your portfolio towards secured, long duration collateral, rather than short term, high yield. I will point out, since we were talking about, the credit union, the community, the journey, a well-informed member usually gets situated with the right product, and that itself has lower credit risk when someone is in the right mortgage for them. So I think credit unions do a great job there of advocacy. The balance sheet continuing, it stabilizes net interest margin. You get longer, more predictable cash flows with the mortgage product. Coupon stability, I guess, right now there's a little bit of question there. I will say mortgages pair very well with deposits and share certificates. So where someone has their mortgage, your odds are greater. We were talking about, the penetration and that member journey. Well, if you have a team that, don't leave that silent period like we are talking about earlier, your odds greatly increase if you have the mortgage, if the team is doing the right discovery questions and introduce the right relationship person. I've seen credit unions out there have, relationship pricing, relationship discounts. Big banks have those type of products out there as well. So a lot of opportunity there. Metrics, to monitor. I mean, you can go forever on this, Peter, and good systems like Byte and all those out there can probably automate this for you. But delinquency rate, right? Let's see what's going on with these mortgages. Maybe take a look at the FICO distribution. Where are we lending in what buckets? Payment speeds, I think, is always important. Are they just, we talked about relationship pricing. Are they just coming to get the mortgage and moving it right away? Or that'll kind of tell you. Obviously, the market plays a factor there. Your fixed versus ARM composition, market also plays a part in that. A lot of credit unions like to monitor loan to share. I think that's an important metric. Um, I think, personally, I think member satisfaction with servicing, whether you keep it in-house or you're outsourcing it, if you're talking about deepening that relationship, you should know the member feedback. How's that mortgage experience? Are they having challenges, getting their documents, whether it's annual tax documents, whatever it is. If you're trying to, deepen that relationship, you should get feedback on how's that mortgage itself working for them. And then just, member mortgage penetration. What percentage of your members have a mortgage with you? You can also, find out what percentage of members have a mortgage in general, and that could be a target audience for you. And then you can work your way through the other products down the hall as well.
Now, Rob, any thoughts on balance sheet and
Yeah, I'm going to simplify it here to some extent, and I agree 100% with what Ali was just talking about. If you think about it, and like I said, I'm simplifying this somewhat. Would you rather do one loan for 500,000 or 10 loans for 50,000 each? Or 20 loans of $25,000 each? From an operational cost perspective, yeah, you'd probably rather do one loan for $500,000 and put that on your balance sheet than a series of smaller loans. But really, the you're right when you talk about the balance sheet and the secondary markets and how the secondary markets impact mortgage pricing in general. The the interesting thing about credit unions is that it's not that they're rate insensitive, but they're much less rate sensitive than, say, a broker or an independent mortgage bank. And credit unions can play that to their benefit. They are, in effect, more stable and less volatile than some of the other potential avenues for mortgages. And so they can, when they're talking to members about a home loan, they have that advantage and they should discuss that advantage with that member. So, yeah, from a balance sheet perspective, mortgages, if you think about assets that financial institutions own, mortgages are right up there. Uh, and it is really we may talk about this at some point, but when you talk about a household and their balance sheet and what should be included, if you look at a home loan, that's obviously part of the picture and part of building wealth for that family. Likewise, on the credit union side, it's a foundational product that should be offered, no doubt.
and so thank you both for that. Now, Laird, I want to come back to you, and I had more questions for you, but the conversation started going towards that investment. So part of me wanted to quickly ask Ali and even Rob, that balance sheet question. But coming back to you, when you look at the local, you can pick any local housing market, or if you want to use as an example, but when you look at a local housing market or even demographic data, from your perspective, where do you see the clearest community needs that credit unions can uniquely meet? And really, how do you turn those needs into membership growth through mortgage?
Well, I think, it starts with using the data or just like, finding a gap and then, figuring out how to fill it, right? And I think key to this is what Rob mentioned about home ownership being probably the single biggest driver on the path to wealth. Okay. So when you look at demographic and housing data together, and again, this can be a local market level, and I mean, it's really almost every market. And you look at HMDA patterns and income distributions, it becomes very clear that the question of affordability, as I said earlier, is the number one challenge, right? And so if you look at the data in most markets, the median income household, again, in most markets, can't afford a median priced home. And this creates, in a sense, the affordability gap. And so you can see this obviously in the real estate data, but you can even see it in HMDA. We see over time loan balances rising and the number of small balance loans, those under 150 dropping, 40 to 60%. So we can see this everywhere. When you look at that inventory gap, you take that and then you marry that with the typical homeownership gaps we're looking at, households of color, low to moderate income households, first-time home buyer, first generation. We see that gap, and that gap is compounded not only by this inventory gap, but then by a trust gap, an education gap, and then a credit gap. And so that's where credit unions come in, and I didn't even mention, when I should, just because the HMDA data show it so clearly, is that when we're talking about that gap, if you even start at the application level, 14% of households in the U.S. are Black. That only represents about 9 to 10% of all apps. You can look at fallout, for first-time home buyers is 2 to 3 times higher than that of repeat borrowers. So there's all these signs that point to that. Not only are we not getting, or not only are applications not being, accepted or even submitted, they're not, there's not as much pull through. So there's evidence alone that this gap exists. And so, why credit unions? Well, it goes back to everything we've been talking about. This is relationship-based lending. And that relationship gives more flexibility. And, if you look at some of the denial reasons for these, this fallout, a big part of this in an affordability, when affordability is a major concern, is being able to design targeted programs, down payment assistance programs, other, flexible, anything that adds flexibility to that, the process of obtaining credit. So that in itself is really shaping, that ability to design and target things, fill gaps. And so that's where I think it fits in. And if you think about it, this is probably the most important, one of the most important moments of a member's, life. And so if it's a positive experience, which Ali talks about, what kind of experience are you offering? It leads to, renting, owning, and then access to the full set of services. It should emphasize transparency, trust, all of those things we talk about as reasons for the gap in the first place. Credit union just, inherently, that philosophy is meant to help that. And so as you're looking at and moving forward, like how do you make sure that you continue to build membership and expand, product usage? You can, making sure that you find, and I think the home ownership journey is a great place to do this and, create this pathway. Find, ways, how do you connect? How do you help with, the first things that come after home ownership? How do you touch base? How do you continue to provide education throughout the whole lifestyle so that you're ensuring that not only are households or your members becoming homeowners, they learn how to leverage that home for building wealth.
Quick follow-up question, and I think I know the answer, but I still want to ask this anyways. When you look at the data, is there a data point or a change that you see that tells you that a credit union is actually converting mortgage touch points or mortgage leads into deeper relationships, not just like a one and done type loan? Is there something
Right.
that they can look at?
Yeah, I think if they look internally, looking at a member's engagement, say 12 to 24 months, after closing, if they're not engaging, if they're not adding, resources and services and ways to connect with the credit union, ask them why, because you should be seeing activity, right? 12 to 24 months, that's a time where you should start seeing that. You can look at again, it's hard to see through HMDA, but they can look and say, over time, are these, homeowners adopting other mortgage lending products? Are you getting their second and third mortgage events? And I think in the data that I look at, like the demographics, HMDA, census, if your member community is starting to align better with the demographics of your community. So if you see increases in how well you're working with and penetrating the LMI market, the BIPOC or minority market, if you see those patterns start mimicking the patterns overall and fitting more closely than say that of your competitors, I think that's a clear sign that you are doing a better job serving the people in the community that others aren't serving. Does that make sense?
It does, and thank you for that. Rob, we just talked a lot about, the data within the community, and earlier on, you mentioned that, and you even put in the white paper that credit unions are best positioned to meet a community void, right? Essentially, that summarize what you said. And so, really, this is a two-part question for you. The first part is what's one policy or even practice change that you would most urgently or immediately expand upon to access homeownership through a credit union? And the second part of the question is, if you could make the leadership case for why a credit union should justify prioritizing mortgage in this cycle.
Sure. So a of big part of life. I'm not going to go too far down the philosophical path here, Peter, don't worry. But a big part of life is just knowing that something exists, knowing that it's out there. I would, sometimes when my kids were small, I'd point at a chair and I'd say, somebody had to make that chair. It's not something you think about. You just sit in the chair and away you go. I'd say somebody has to make that chair. Somebody has to make that car. Somebody has to make that house that we're living in, right? And so a big part of the process, I think, at a credit union level is the ability to educate and to inform the members that A, they offer that product, but just as importantly, B, you can own a home. Because I think there's a certain percentage of the population that grows up and they will always rent. And maybe that's a choice. There's another part of the population that grows up thinking, okay, well, I'm a renter, but I really want to own a home. And my parents own a home, and I'd like to do the same. And so I'm going to embark down that path. Where am I going to go? How am I going to accomplish that goal? And a credit union is in the ideal situation to help educate them about home ownership, about the products that they have. And they can start early because the credit union is part of the community or part of a corporate community. They are in a unique position to be able to offer classes and to say, hey, here's a home ownership 101 class for our members or for the children of our members, or to go to a local high school and say, okay, here's what it means to own, here's how you own a home. To be able to put that seed, to plant that seed in the members' minds, I think is something that credit unions are in a great position to do. In terms of your second question, and that was basically how if you are a lender working for a mortgage part of a credit union, an originator, how do you go to management and say, hey, we really need to beef up this part of our business, basically. We're relevant. Home ownership touches so many other parts of the business. Uh, what happens when you buy a home? What financial events follow from that? If you own a home and you're making your mortgage payments and you think about, oh, I really want to, I need a new kitchen or I really want to redo the yard or I need a pool, where are you going to go? Typically, it's not, oh, an ad that you see on a supermarket cart or something, some pop-up ad that you see on your computer. It's probably the financial institution where you're making your mortgage payments or where you got your home loan to begin with. And if you're a credit union, the ability to offer that leads to so many other products. So if you are focused on mortgages and working at a credit union, the pitch is to senior management, A, I don't want to send a potential borrower away. B, we like our members and we want to be a full service shop for them. And C, why not offer this because we can? I heard an interview once uh, with a general manager of a sports team, and the reporter was asking this general manager, why did you sign Joe Smith to play next season? And the general manager said, because we didn't want to play against Joe Smith, right? If you are a credit union and you have a member who needs financial services, a basic building block is a mortgage. You don't want to send that member to to a broker or a bank or an independent mortgage bank. You want to be able to service that person because that member will come back for other services. And so it's just, I mean, mortgage is a huge financial commitment, but it's also a stepping stone to other financial services that credit unions have the ability to offer, whereas an IMB or a broker can't offer those. So why not keep that member while you can?
No, and I appreciate that. Thank you very much. No, there's also a flip side to this, and that's the fact, and it's the cold hard truth is not every credit union has the resources to invest, right? And I think that's the cold hard truth. The average credit union, what, 10 years ago was 147 million in assets. Now it's averaging about, I want to say like around 450 million in assets. But still, even at that point, you don't have the resources. So Ali, as the credit union person, you, when is it, when does partnering with a CUSO makes the most sense for kind of getting your feet wet in mortgage lending?
The situation will be different for every credit union, but generally there's four big reasons where, it points to the CUSO being the best route. The big one is scale, right? We've seen the last couple cycles where credit unions maybe had some challenges scaling up or scaling down. CUSO in that scenario could have, navigated that route a little bit easier for them. You're talking about maybe there's some high fixed costs with the infrastructure. You needed some specialized tech, you staffing, right? You couldn't recruit enough, or couldn't afford the talent. Then you get into like regulatory compliance, right? You don't have the skill set or the understanding of it to be compliant. Um, Speed, it might take, let's say you have scale and resources and you can write the check, but you're talking sometimes a year, 2 years to be up and running. So speed to market, CUSO can get you that point much faster. Or let's say you didn't have the resources, right? So your balance sheet couldn't support it. Well, a CUSO to the rescue. So and we've seen many of these scenarios, Peter, where they're utilizing this to minimize risk or help with the fixed costs. And to Rob's point earlier, when you're competing versus the big bank, I mean, this kind of allows you to act like a bigger bank, right? It allows you to have longer reach, still your member, there's different ways to offer the mortgage, like Rob was trying to put out there.
It's not just that. I mean, I'll add some additional color to this. It's the expansion of your products that you have, right? Um, Not every credit union wants or can originate a government loan.
Yeah.
CUSOs can, right? Put that risk on them. Um, especially if especially if you're in an area that requires you to have, FHA, VA, USDA, just food for thoughts. Now, a question did pop up, in the chat, and really anyone can answer this. Manny in the audience asked, or he first started by saying, I'm doing a Saturday home buying webinar for our members. Are there other ideas for converting members to home buyers? So really anyone could take it. I mean, Lee, I know that you've had your fair share of home buying seminars and webinars. Laird, Rob, love to get your thoughts on, Manny's conversion ability to convert attendees to home buyers.
Yeah, I'll take the first stab. I mean, if you have a footprint, I'm guessing the workshop is in the branch. You promote it. You bring in your partners, your realtor partner, maybe a CPA. You get all the value of all the folks, experts needed in this transaction in one spot for your member. You do it on a heavy traffic day. All banks do that. Not recreating anything new there. But if we're talking about deepening relationship and using your partners, I mean, how about, reaching out to your folks in wealth management, maybe a combined effort seminar, half the time them presenting, half the time on your side. I mean, if you have auto, you can go and present at the dealerships. There's a lot of other ways where you can promote to the members. The digital channel, obviously, I think is going to be the easiest and least, on lift on cost. But if you can't go those routes, the homebuyer workshops also work with your realtor partners. You can do it in their facilities as well. It doesn't have to be in your branches. It's value, your loan officer's adding value, and if you have some market advisory tools, you could take that to them there and help them do their job better, cost of waiting, and all those things down the line. Those would be my first reactions, Peter.
Okay. Rob, Laird, any thoughts, or did Ali sum it up nicely?
Summed it up nicely. I would just add that to keep in mind as you're doing that the importance of storytelling. Tell the stories of, maybe, some of the people, the team at the credit union, their story of home ownership, members' stories of home ownership. I think it's important, to kind of emphasize what that journey looks like, that it's not a terrifying journey, and that at the end of the day, it sets you up and prepares you for what's ahead. I just think that's really critical because I think that it communicates what are very technical things in a way that everybody can understand.
I think that something that's very effective we're getting into the weeds here a little bit, Peter, but something that's very effective is you have a room full of people who have signed up for this home ownership. And the presenter starts off not by saying, "Hey, everybody, welcome. There's cookies in the back. We'll take a break here in about half an hour." Kind of, they're sweet and nice and everything's fine. But to confront them and say, "Okay, here's a whiteboard. Let's make a list of reasons why you should not own a home or why you can't own a home." And so somebody will say, "Well, I don't have 20% down payment. Oh, it's expensive. Oh, it's this. Oh, it's that." And you find out that way what's on their mind. And then you, as a credit union, go through one by one and explain how your credit union can overcome each one of those objections. Like, "Oh, we've got this kind of down payment program. Oh, it's not expensive. How do you like having a landlord that can raise your rent, every year? Oh, it's not, this, it's not that. Here's what we can offer." And I think when you engage the room like that, it's much more effective than giving them some kind of canned, "Here are our programs, and here's this, and here's that." So I think that's a good way to start a presentation with a room full of potential home buyers that are made up of your members or even the non-members who may be there, and encourage them to join the credit union. And here's why. Here's how we are overcoming home ownership objections, and here's how we can help you.
Oh, thank you very much for that. Now, we are approaching time, but I do have one more question for Laird. So Laird, the afterwards in the white paper warns against cutting professional development. And, ultimately that's, I don't want to say the first step into growing mortgage, but you could easily argue that it could be the first step of the need for continued professional development. So from your perspective, if you could pick, I don't know, for the sake of time, two skills or things that really move the needle most for a credit union that wants to modernize or even build a member first mortgage division.
Think on the sort of on the strategic side, the I don't want to say executive level side, but kind of on the for the big picture, I think it's hone the ability to think ahead, anticipate the needs of members and communities, by and the only way you can anticipate their needs is to really know them. So get to know your communities, so that you can always be sort of that guiding light. And then, of course, from that, you can design products. You can figure out how to talk to them. All the things we've already discussed. Externally, though, I think the one skill to continue to develop is the ability to communicate effectively. Whether that's outreach to partners, other practitioners, prospective homebuyers, members, and communicating effectively means kind of the same thing, that you have to have a level of competency for understanding how to communicate to your to two different audiences. And I think that comes from a pure sense of, knowledge of why home ownership is important, knowledge of the process and the products, and then putting those two things together so that you really are, a trusted advisor throughout the whole process. So I'd say communication, and then big picture, thinking ahead strategically for what fits, what are the ways to continue to fit people's needs as things change.
Okay, thank you for that. Well, group, we are officially out of time. Rob, Ali, Laird, thank you very much for spending some time with us. Truly do appreciate it. Again, all of you are very passionate about mortgage, but you're also extremely invested in seeing credit unions move this needle forward. So your insights and your contributions to our white paper are extremely appreciated. So thank you.
You bet. Very
Thank
welcome. Anytime.
Thank you.
And to close out, everyone, once again, thank you to Bobby and Byte Software for sponsoring today's webinar, and to our panel for their valuable insights. And to all of you, thank you for attending today's webinar. Your time is valuable, and we appreciate you spending the better part of an hour with us today. We hope that you enjoyed today's session. We understand that an hour isn't nearly enough time to cover everything on this topic. So if you want to learn more and continue to fine-tune your skills, I would recommend attending one of our upcoming events or listening to one of our podcasts, where you'll find that we continue this conversation and much, much more. Head over to www.acuma.org or our community page for more information. Until next time, my friends, be well.